Hey, good morning and welcome, guys. I'm your host, Dane Funamas. This is Council Breakfast, and this is part of our weekly wrap, right? Just confirm for me, everybody can hear me and see me clearly. After load shedding, power on and off, we tend to have some bugs in the system. So if you guys can hear me and see me and everything is good, then we are ready to get started. Now, just first and foremost, guys, for those of you that were with us in last night's session, we had an amazing session. If you're still in these sessions, guys, MVTs for every single one of you, right? We have streamed for well over 20 hours this week, right? We've been live for well over 20 hours. We've placed, I don't know how many trades, and it's been an amazing week. So I see that most of our clients have attended almost all of our Pips for Dinner sessions, which is absolutely amazing because that is where the fire is at. So if you were part of our sessions last night, we caught some sells on indices. We got in some buys to take care of those gaps. But there's some interesting things that I want to point out that I've seen in terms of a trend almost every Friday on indices. So we are going to have a look at that and point that out. In addition to that, I showcased and demonstrated our technology and the future of what we believe in terms of where the next trading platform is going to be. Graham saying background music is always on. Absolutely, always on fire. That's what it's always about. So there is a ton of things coming into play next week. We've wrapped up this week super strong, but looking at what we've done this week, we're going to make some changes for next week. And these changes are going to take everything we've done and take it to the whole next level. We're going to be changing and doing little different things with the shows, in terms of the segments, in terms of how we deal with the trading. And the free broadcasts are going to be a lot more condensed and compact and easy to be able to understand. And we're going to have a slightly more advanced sessions. Then we're going to have super advanced and super technical sessions. So catering for each of your needs, for people that are beginning versus people who are fairly confident, have placed a few trades, and for those who just crave a lot more technical and market information. So we are going to be doing those customizations, and we will be announcing how that will work and how you can benefit and take advantage of that. Now, we have a bit of news in the markets today. I think first and foremost, and not most importantly, but obviously something we do want to chat about, is obviously Elon taking over Twitter. But before we get there, let's start on the local front. And we're going to be having a look at essentially what the new finance minister has done. And there's a bit of a gap in the markets, right? Because there's no real consideration for SAA that is obviously still pretty much in the trenches at this point in time. So a lot of people are saying his budget and his expectations are good. Could it be too good? Could it be too optimistic? We obviously need to wait and see. Obviously, we would love if someone can come in and start turning things around. The least we can do is thoughts and prayers with him. Now, moving into the UK, the pound has benefited from that euro interest rate that we saw yesterday. Again, that interest rate increase knocks the immediate currency, and the pound has taken a bit of a benefit from that. However, the pound is still pretty much in troubled grounds at this point in time. So euro, pound, and the dollar, right, in this next week are all going to come under scrutiny. There should be weakness across the board on these major currencies, and that's going to give us opportunities on commodities, on indices. So this next week, the eyes are going to be on indices and commodities, right? There's going to be a lot of FX opportunities, but I see a lot of opportunity there. Again, with weaker major currencies, that is the premise for why crypto exists. So next week, we're going to have a lot more focus on the crypto community and what types of things we can potentially start taking advantage of. Looking at US news, obviously the big item for the day is the fact that Elon has taken over Twitter. He did it in quite a dramatic fashion, right? In essence, he changed his Twitter handle to Chief Twit. He took a basin, like a sink, into Twitter's head office and basically said, let that sink in, right? So he's an absolute comedian. I think definitely one of my favorite types of people, especially in terms of market leaders. Super eccentric. He says what he thinks and he thinks what he says. And just very exciting to see what he's going to do with Twitter, and what that knock-on effect could do for some of the other stock holdings, right? In terms of Tesla, in terms of some of these other items. So Tesla has been badly affected by this deal, right? Because there was a lot of speculation and nerves over what he could end up doing to liquidate his current stake or liquidate some of his shares in Tesla to pay for those Twitter shares. So I feel as progress gets made, we could see both Twitter as well as Tesla start to rise in the coming weeks. So we are going to still pay quite a bit of attention to that, and he is going to bring in some pretty big changes. Now, last night's report, right, Apple's pretty much gave us record revenue, right? Record revenue, good earnings. But in the details, there was a slight disappointment on iPhone and services. However, Apple did extremely well overall, right? Amazon was the big letdown there. Amazon is currently trading at this point in time, I believe, about 20% lower, right? Because of those missed expectations. So EPS was good on Amazon, but they missed on revenue, right? So we dealt with that last night. We took advantage of the markets live in our sessions last night. Now, remember, if you want to be a part and parcel of that, you obviously want to make sure you get your account funded and get your account sorted out so that you can get the link to all of these premium sessions. There's only going to be more of them moving into the future. We're going to diversify. And as I said, shows are going to cater for different learning skills, right? For different peoples at different levels, right? So we obviously want to make sure that we're catering for all of you, but you need to have your live account to take advantage of all of those amazing and free services, right? GDP data that we got yesterday in terms of the gross domestic product for the dollar indicates that a pivot is not going to happen from the Federal Reserve, right? So meaning based on the GDP data that we got, right, that is not going to change the Federal Reserve's outlook, and they're still going to remain pretty hawkish. Now, remember, we have that Federal Reserve interest rate decision next week, Wednesday. That's the 2nd of November, and that is going to be a big one. Next week is going to be huge. We also have NFP on Friday. So we're going to have a look at that massive impact in terms of the interest rate, and then we're going to get the jobs report and the labor market for the US dollar. So we can expect a ton of volatility next week. And again, these negative knocks, right? If NFP misses and we get a negative on the Federal Reserve interest rate, this is going to further fuel commodity and indice markets going back into a state of normality. And we can already see, as per what I said earlier in the week, is NASDAQ, is the indice markets in the next bull leg? And we can start to see that definitely becoming a reality as we look closer and closer into markets. Now, in terms of the fundamentals, we're going to open up and have a look at what is currently happening on the S&P 500 heat map before we jump into the actual fundamentals for the day. So let's have a look at what is currently happening on the S&P 500 heat map. So again, pretty much green across the board, but Apple taking a slight hit, 3%, Microsoft 1.98, Google 2.34, Amazon at 4.06, and Meta definitely the loser for this one, down negative 24%. So yeah, that is where the big trouble currently sits. So guys, we are having a little bit of issue, I think, on the power surge side of things. We're blowing a lot of our battery packs at this point in time. So we are going to have a look at how that is, what is busy happening. We will get that sorted out over the weekend, but we are just going to quickly do a 15-second intermission, and we're going to quickly get one of those battery packs changed really quickly. So give me 15 seconds and I'll see you guys live in a second. Okay, brilliant. So hopefully we didn't break anything. We're still good and we're still live. That's great. We did reset the timer. However, that does happen when we switch from scene to scene every once in a while. But moving into some of the fundamental data for this morning, we obviously want to have a look at what's busy happening on the economic calendar. Now, the economic calendar is super busy today for a Friday. And that's just purely because of the fact that, Fridays we start to get all of that trickle data that's coming in, right? So we've had a ton of activity already this morning, especially European markets. European markets are going to be the focus for today, just from a data perspective. Euro got some fresh CPI data, is really not good. Even though it reads as positive, we see that as green. Remember, higher CPI means and is linked to inflation. So Spanish GDP coming up in a minute from now, as well as German GDP coming up at 10 o'clock. And then we're going to move in onto the euro. So the euro is going to be dominated by data this morning rather, and leading up into this afternoon. So definitely something to look out for. There's going to be a ton of volatility, and whatever we see here could set the tone, especially on items like Euro GBP. And again, the euro is under quite a lot of pressure. So if we see, and you're going to have to read into this, right? If you're going to see higher CPI numbers, high PPI numbers on the euro, that's bad for the euro. It's causing that inflationary headroom. So again, it could be net positive short term, right? Because it's showing higher pricing and better sort of sales, if you will. Things are becoming more expensive, but the long-term outlook is that leads to inflation. And so it's whether the markets are going to pick up immediately that this is bad and then start that sell-off, or to have that temporary boost in positive data and then have the sell-off once markets realize this just means that there's going to be further interest rates. So that's obviously going to be something we need to pay attention to. South African trade balance doesn't really mean much or do anything. And then you're going to get a bunch of what looks like new fundamental items that are going to come into the markets. And this is all on the dollar. And these are all medium impact, so they can move things. But I think the biggest item here is going to be a CPI price index. That's going to be happening at 2:30. Now remember, Fridays I don't trade live, and I merely observe the markets and plan for the next week. Look at the shows, look at the schedule. What are we going to be trading? When are we going to be trading it? And so Fridays I generally don't trade live. However, I have got into the markets, gone into the details, and I found something very interesting I'd like you guys just to know and potentially benefit from in terms of indice trends. So we're going to move into the analysis section, and I want to show you guys what I found, and I think you might find this very, very interesting. So we're going to start off with analysis from an indices perspective this morning, because I just want to point out what I found, and then you can use this to your advantage however you see fit, right? In essence, what we're going to be doing here is we're looking at all Fridays for the past 3 or 4 months, right? The reason being that I've spotted a trend that I believe is something that we can use to our advantage specifically on Fridays, right? So part and parcel the reason why I don't spend a lot of time actively trading the markets on a Friday. I'll spend a lot of times in analysis, a lot of times breaking down what's happened, filling in my trading journal, doing some self-reflection, these types of things. But what I want to point out is that I found that most Fridays we get a break in price action, or we get these absolute runs that go against market structure. So I spent a little bit of time early this morning starting to figure out, where do these trends sit? And what I want to point out is that if we look at the last 15 Fridays, right, over the past 3 or 4 months, what we've noticed is that of 15 Fridays, excluding today, right, so it would be 16, which makes 4 months. Of the 15 Fridays, we've had 5 bull days, 5 bull Fridays, where we've had 10 bear days, meaning that we see more Fridays sell off than any other day of the week, right? And this might be part and parcel to why I don't enjoy trading on a Friday, and specifically because we see breaks in price action, we see these monster sell-offs, and it's just something I want you to take note of. So I've gone ahead and looked at each Friday and mapped out, what has happened here. So if we count the bull days, we can see 1 bull day, 2 bull days, 3 bull days, right? 4 and 5, right? Over the last 15 Fridays. So that's something I just want everybody to take note of. We see these massive sell-offs on these Fridays, right? So whether we're going to see that today, we obviously need to have a look. But I believe there's a few things that can point out a sell-off on indices looking at a Friday. And the other thing I just want to point out as well is that when we get these sell-offs on a Friday, and the reason this is interesting to me is that these sell-offs generally trickle into the next Monday, right? In most of these cases, they open up and by Monday morning, we're still in a sell. In a few cases, right, it actually reverses and goes to a bull market. But in most cases, right, these moves trickle into the next Monday, and the Monday is a continuation of that Friday's sell, right? So I just want to point this out. Now, how do we take advantage of that from today's perspective? What do we do with that information? Well, the reality is that when we're looking at US 30, and I just want to point out as well that US 30 is in a far better position than where NASDAQ currently is, right? NASDAQ, if we look at this bull move here from the 13th of this month, right, NASDAQ has already pulled back over half, right, from that spike, half of its gains. If we look at US 30, right, over the same period, let's only go to an hourly time frame. right? If we look at NASDAQ over the same period, that 13th bull run, right, we've barely retraced at all, right? So US 30 is doing extremely well to the top side. NASDAQ, obviously with all these tech earnings, is taking some big hits. This is a 30-minute time frame, but I'll put it on an hour so you can see apples for apples here. But NASDAQ is taking some big hits. I just want to point that out. So, how do we identify a bear day versus a bull day? And it's going to be fairly simple for us to point out, right? In most of these cases, we already start building out a bear or bull day from the morning. But what I can tell you is that whatever happens on the New York Stock Exchange, whatever that momentum is, right, is generally a continuation all the way into the evening, into the next Monday. So that is some valuable information that you can use. If you're trading later on this afternoon, I will be on my phone, but I might not be in the studio at that time. But in essence, I'm going to be looking out for what is the trend at the New York Stock Exchange open and how do we continue that trend into the Monday. I just want to point that out. Every 2 Fridays out of every one, we get bear markets, but we do also have those occasional bull markets, right? So a lot of volatility on a Friday. And again, price action breaks. We get a lot of structural breaks. So what I would advise is have a look at where this market is currently going and see where it is that you can take advantage from that perspective. Now, looking into the London Open this morning, as we've ticked past that 9-minute mark, I just want to point out as well, right, that we have not yet broken this bear market structure that US 30 is currently in this current state of affairs, right? So we sold US 30 yesterday, we bought US 30 yesterday, and looking at the momentum of this market, I'm getting in on a sell, and I'm currently in a sell on US 30 as we currently speak, right? For the reason being that should we continue this day in a bear market momentum, then obviously I want to continue to hold that sell. But should we be in a position where we start to rally and or break through, this could signal the next bull day. And it's going to be a really simple market structure to draw out. Also pointing to the fact that on US 30, we also have this diagonal here, right? This diagonal served us yesterday to look at the point of breakout, right? For that move that we ended up getting. Markets reacted quite volatile, built up, and then utilized that level to push back off. Now we are approaching that same level at this point in time. That's demarcated by this aqua blue color. So we've got quite a few levels of resistance above us, right? So whether that will mean the greater sell-off, right? If markets are digesting that Apple and Amazon data and saying, the tech data is just not there, state of the markets looks kind of shaky. We have the Federal Reserve meeting next week, but all these external factors that could then cause that greater sell-off to the downside. So I just want to make you aware of that. And we obviously want to catch the bigger move here and not too much necessarily in terms of these micro trades or scalps up or down, right? It's definitely going to be the season we want to start getting into some bigger trades. And that's part and parcel what the focus is going to be next week, is identifying swing trades for those of you who have large accounts that can afford to hold bigger stop losses, right? Because again, with $100, you can't hold a swing on an indice. It's almost impossible, right? Because you need to have 1,500 pip stop loss to accommodate for any volatility or days of delay before a swing materializes. Because a swing trade is not like a day trade. It's not like a scalp. It can take 3-4 days to materialize and essentially range within those 3-4 days. And the minimum range within a swing is anywhere between 1,000 to 2,500 pips, right? So $100 accounts just won't be able to handle that. And so we're going to look out for bigger swings for accounts that are $1,000 and more, right? So that's how we identify the next level where we're going to take things a little bit more advanced, is those that have $1,000 and more. So bare minimum, you've got to get your $100 sorted out. But those of you obviously want to go deeper, we will be looking at $1,000 plus to be able to guide you through those sessions in great detail. Okay. Now, quickly just moving in again, I'm not going to place anything because I am obviously in some trades. NASDAQ, we still obviously are in that buy off the bottom of that spike. So again, I'm not physically placing any trades other than the ones I already currently have, right? So how I've hedged this setup is that I've got a sell on US 30. And so if US 30 breaks trend and structure, I'll make money on US 30, and my US 100, my NASDAQ, will close out in profit. If my US 30 gets stopped out and we spike towards the top side and we have a bull day on US 30, my sell would get closed out and my US 100 would run in profits, right? So it's also possible to hedge on similar correlating instruments as opposed to just buying and selling on the same instrument pair to protect yourself from a breakout, right? So that's one of the strategies that I will use is I'll look for good market structure and then position myself accordingly, ideally being a day early into a sell or buy, being in profit, and then hedging in the opposite direction on a separate commodity for a stop loss that is less than my gained profit that I already have on the other correlating instrument. If that makes sense to you, great. If it doesn't, please don't worry. This is part of the stuff we'll teach on the advanced side of things. So please don't stress about that. But as long as it kind of makes sense and sinks in, that's good enough for now. Now, quickly having a look in terms of some of the FX side of things as we jump into some FX analysis. I want to start off with the dollar index as we usually do, and just pointing out and understanding the fact that, you know, we obviously have that break in market structure on the dollar index. We're currently sitting in that retest zone, and the dollar really looks like it wants to get back into structure. It wants to gain some momentum to the top side, right? This retest is not as straightforward as just a, you know, market coming back and retesting and just happy to go. This thing is really retesting, and it's failing to break to the downside. So from a dollar index perspective, we could start to see some really good momentum, right? And again, that's going to fuel an indices sell for Friday. So the dollar might come in with a bit of strength on Friday, being today, and again, that would fuel those indices sells. So I just want to point that out and make you aware of that fact. Okay, beautiful. We're going to move into Euro USD because I think there is still good opportunity for us to be had here. And Euro USD temporarily got over our parity level, right? But ultimately has broken in back down into that 99.61 mark. So €1 buying 99 cents US, and let's see, seems like 60 pips. So 0.9963. Now, what do we do about this, right? Euro USD, especially if the dollar is going to pick up some value and obviously build some sort of momentum before that Federal Reserve meeting, we could see Euro USD come back to levels that we know are strong supports, right? So we could see Euro USD come down to that 0.9917 mark and then start to rebuild on a potential weaker dollar from that interest rate announcement. Now, again, remember, over the recessionary periods and the study that we've done, we were part of that live broadcast. We went through, you know, the last 20 years of recessions and what the Federal Reserve has done and what the knock-on effect has been on local currency being the dollar, as well as markets, indices, and commodities. And in most cases over the past, 50, 60 years, we've seen that raising interest rates has a net negative on currency, but then a positive overall for stock markets and Wall Street. Over the 6 months, right, over 2022, those interest rate hikes have actually had a positive effect on the dollar and negative effect for currency or indice markets. So what we want to look out for here is whether this interest rate announcement will bring weakness to the dollar and fuel indice markets. Because if it does, it means we're back into a state of normality and we could see indice markets continue those rallies as we've seen in past recessionary times, right? Again, there's a saying that the rich get richer and that is poor, and that is true even for recessionary periods, right? When there's recessionary times, people lose a ton of money and the rich keep getting richer. While Wall Street and wealth continue to build wealth out of these increased interest rates, right? So the data's there. You can go ahead and go search for it yourself, but I can promise you it's there. This year, we're not seeing the same thing. That parity, that correlation is broken. So again, that's why all eyes are on Wednesday to see what happens with that Federal Reserve interest rate and whether we see normality come back into these markets. So overall, I'm still bullish on indices, but again, I need a few more factors to come in and trigger and give us the motivation to get into those long-term buys. Those are going to be some swing trades that we're looking at. We're looking at that perfect moment in time where we can start to get long and start to capitalize on indices long-term in the markets. Okay, beautiful stuff. So moving on with our FX analysis before we wrap up here today, we're starting to see that temporary strength that we got out of the rand is starting to fizzle off today, right? So we initially got, it pushed down to the downside a lot further than what we were expecting. we were initially looking for a buy off that 1820 mark. We pushed down to the 78.6. There's our fib level just there. And we seem to be holding out here. We seem to be ranging, right? That range is due to two factors. The range is due to the fact that this is all dollar move, right? The rand has got nothing to do with these moves. It's got nothing to do with the new finance minister. This is all dollar weakness that has put us into this 1794, 1792 zone, right? Now, the fact that the dollar is lingering and the fact that the dollar correlation has just literally tried to retrace. Again, quick look at the dollar and you'll see what it is I'm talking about, right? This momentum over here on the dollar, this is a 4 hour. If I put it on a, sorry, it was a 1 hour. If I put it on a 4 hour, that move over there, right, is responsible for that move over there, right? Again, so when dollar index rises, we will see USD ZAR buy because the dollar is the base currency. When the dollar gets stronger, it buys more and more South African rand. And in relation to the dollar, the rand falls in value. So again, should we see that dollar break through that diagonal resistance here? Again, we could also see that ZAR takes off of this level here, and we could go back into those 18, 20, 30, and 50 marks. Right, so I just want to bring your attention to that and just make you aware. Now, looking at gold, because again, gold is going to be one of the leading contributors towards whether we see market stability. And we may end up wrapping up with gold because there's not too much to discuss on a Bitcoin side of things. But looking at gold and where gold's currently sitting, we're sitting at that perfect moment in time, right, for gold to start rallying. However, we need a weaker dollar for that to even be remotely possible, right? Now, again, looking at where the dollar is currently sitting, right, the weaker dollar certainly doesn't look like the setup for the day. It certainly looks like the dollar wants to rally and obviously is going to drive indices down. It's going to drive gold down, right? So a potential opportunity, instead of hoping for a bounce, we might need to seriously consider looking at a breakthrough of this support and how we can capitalize that towards the downside. Right, if you look at gold's immediate market structure, we can clearly see that we have started that breakout process and gold is starting to make those further moves and declines towards the downside. Now, where is that support exactly? I would, because we're using a diagonal support at this point in time, I would estimate it to be pretty much where we are right now, right? Again, when used as support, markets have not projected through it in a massive way, right? The support has been fairly clean, but as a resistance, we've projected through this level multiple times and for quite deep numbers, right? 80 pips on gold is not huge, but it's still fairly high if that's your stop loss tolerance, right? So from a support perspective, if we start to push through this zone, as we've seen in the past, when gold has used this level as support, it really has not, tested it deeply. So meaning a push through further than normal standard deviation would mean that we are going to get a breakthrough on gold, right? So I would really look at this. You could potentially monitor it on a 1 minute just to sort of see that momentum. We can really see that momentum starting to build right there as we press into that price of gold. So opportunity may be there. You just obviously want to watch the dollar index and just overall market strength here to catch some sort of direction. Again, should the dollar start that breakout process to the top side, right, and we see indices fall, again, as per those trends, when indices fall, they fall most of the day on Friday. When indices rally, they rally most of the day on Friday. So a continuational fall on NASDAQ, continuational fall on the Dow Jones will generally signify, if we get a fall on indices, will generally signify a bull day in the markets for the dollar. A bull day in the markets for the dollar would cause that gold sell-off for the remainder of the day. So this might be something you want to look into if that's something you're going to be following. Because I'm not going to be on my terminal the whole day and trading the whole day, just simply a trade that I can't afford to get into from a concentration and time perspective. Currently at this point, yeah, absolutely. I think I'm running on 6 hours of sleep over the last 72 hours over the last 3 days. So definitely not healthy, and I will make this and make it better for next week. Self-care is pretty important. But outside of that, those are pretty much going to be the only things I'm going to be looking out for this morning, and then obviously wrapping things up this afternoon. So US 30 is continuing that little bit of a sell-off there. So that's pretty good. only around 200 to 300 pips towards the downside. So I'm pretty much going to hold that, and I'm pretty much going to hold my NAS positions, right? So taking some profit already on NAS, but what I'm essentially just going to do here is make sure that my stop loss is in a profitable position, and that if I get taken out here, I will essentially bank a couple hundred pips. But more importantly is I'm going to be looking at capitalizing on that US30 sell. So guys, outside of that, remember we are not live on a Friday for dollars for lunch, as well as in the evenings. So please utilize this time to maybe go past and have a look at some of the older broadcasts from this week, and get yourself involved and knowledgeable on what has happened and what has transpired. So what we will be doing at the end of every week, we will release the premium sessions, some of them from that previous week, right? So those of you who have your free accounts or don't have accounts yet or not funded, so you can still catch up and learn a little bit. But obviously the live environments are for account holders with more than $100. That is where our focus is. But outside that, guys, listen, I hope you have an amazing weekend. We're doing a lot of things this weekend. We're doing some shooting. We're getting the academy up and running. A lot of exciting features and functionality that is going to be coming. And I will be inviting those of you who've been our MVTs, who've been in all of our evening sessions, to come and be part of our insider circle, to come and test all the new technologies and features we are going to be rolling out. So guys, it's been an amazing week. Thank you so much for your time. Again, with a lot of these free services, time is the most valuable thing and contribution that you guys make. And spending this time with us and being active in the chats and contributing, sending your screenshots, tagging us online,